Understanding cryptocurrency, a new digital frontier. In this chapter, we delve into the fascinating world of digital currencies. The world of finance is changing rapidly. Digital currencies are emerging as a significant force. Cryptocurrencies are at the forefront of this financial revolution, transforming how we think about money. But what exactly is cryptocurrency? How does it work? In simple terms, a cryptocurrency is a digital form of money designed to be secure and, in many cases, anonymous. It uses cryptography for security, ensuring that transactions are safe and private. This cryptographic security secures transactions and controls the creation of new units, making it a robust system. Unlike traditional currencies, cryptocurrencies are decentralized, meaning they operate on a peer-to-peer network. This means they are not controlled by governments or financial institutions, giving users more freedom. Bitcoin is the most well-known cryptocurrency, often referred to as digital gold. It was created in 2009 by an unknown person or group using the name Satoshi Nakamoto. Since then, thousands of other cryptocurrencies have emerged, each with unique features and uses. Ethereum is another popular choice, known for its smart contract functionality. Each cryptocurrency has its unique features and purposes, catering to different needs and industries. Cryptocurrencies offer a new way to think about money, transactions, and the economy. They have the potential to revolutionize finance, making it more inclusive and efficient. But it's important to understand the technology behind them to fully grasp their potential. That technology is called blockchain, a decentralized ledger that records all transactions across a network.
Blockchain technology is the backbone of cryptocurrencies. It is a distributed ledger. This ledger records all transactions across a network of computers. Imagine a digital record of transactions. This record is copied and distributed across multiple computers. This is essentially what a blockchain is. It ensures transparency and security. Each block in the chain contains a record of transactions. Once a block is added to the chain, it cannot be altered. This makes blockchain very secure. Blockchain technology has applications beyond cryptocurrency. It can be used for supply chain management, digital identity, and more. Understanding blockchain is crucial to grasping the potential of cryptocurrencies.
Why are people investing in cryptocurrency? There are several reasons. One major attraction is the potential for high returns. Cryptocurrencies have experienced significant price appreciation in the past. Bitcoin, for example, has seen astronomical growth. This has attracted many investors seeking substantial profits. Beyond potential returns, cryptocurrency offers decentralization. This appeals to those wary of traditional financial systems. Cryptocurrencies put the power back in the hands of individuals. Furthermore, the crypto space is a hotbed of innovation. New cryptocurrencies and blockchain projects are constantly emerging. This creates opportunities for early adopters and tech enthusiasts. The potential for returns, the appeal of decentralization, and the excitement of innovation all contribute to the allure of cryptocurrency.
While cryptocurrency offers exciting possibilities, it is not without its risks. One of the most significant risks is volatility. Cryptocurrency prices can fluctuate wildly. This volatility can lead to significant losses. Investors must be prepared for this inherent risk. Another concern is the regulatory landscape. Cryptocurrency regulations are still evolving. This uncertainty can create challenges for investors. Security risks are also present. Cryptocurrency exchanges and wallets can be targets for hackers. Investors must take steps to secure their digital assets. Volatility, regulatory uncertainty, and security risks are all factors to consider before investing in cryptocurrency.
Section 5. Investment or gamble. Examining both sides of the coin. The debate rages on. Is cryptocurrency a sound investment or a risky gamble? There are valid arguments on both sides. Those who view cryptocurrency as an investment point to its potential for long-term growth. They believe in the underlying technology and its disruptive potential. On the other hand, some see cryptocurrency as a speculative bubble. They point to its volatility and the lack of intrinsic value. For them, it is akin to gambling. The truth likely lies somewhere in between. Cryptocurrency can be a high-risk, high-reward investment. It is essential to approach it with caution and a clear understanding of the risks involved.
Section 6. Profiles in Crypto Understanding Investor Motivations. Cryptocurrency investors come from all walks of life, ranging from tech-savvy millennials to seasoned financial experts. They have different motivations for entering the market, each bringing their unique perspectives and goals. Understanding these motivations can shed light on the diverse perspectives within the crypto community, helping us appreciate the varied reasons behind their investments. Some investors are driven by the potential for quick profits, hoping to capitalize on the market's volatility. They are attracted by stories of overnight millionaires and the allure of rapid financial gains. These investors often have a short-term outlook, focusing on immediate returns rather than long-term growth. Others are drawn to the ideology behind cryptocurrency, valuing its potential to disrupt traditional financial systems. They believe in decentralization and the potential to create a more equitable financial system, free from centralized control. There are also institutional investors who see cryptocurrency as a strategic asset, integrating it into their diversified portfolios. They are allocating a portion of their portfolios to crypto as a hedge against inflation and economic instability. Understanding the motivations of different investor groups can provide valuable insights into the dynamics of the cryptocurrency market, helping us navigate this complex and evolving landscape.
Section 7. Mitigating risks. Strategies for prudent decision-making. Investing in cryptocurrency can be risky, but there are ways to mitigate those risks. One crucial step is to conduct thorough research. Before investing in any cryptocurrency, it's essential to understand its purpose, technology, and team. Don't invest in something you don't understand. Diversification is another key strategy. Just as with traditional investments, diversifying your cryptocurrency holdings can reduce your overall risk. It's also important to start small. Don't invest more than you can afford to lose. Cryptocurrency is a volatile asset class, and losses are possible. By conducting research, diversifying, and starting small, investors can make more informed decisions and manage their risk exposure.
Section 8. Beyond direct investment, exploring alternative avenues. For those who are not comfortable investing directly in cryptocurrency, there are alternative ways to gain exposure to the crypto market. These methods can provide a safer and more familiar route for traditional investors. One option is to invest in companies involved in the cryptocurrency ecosystem. These companies are often at the forefront of technological innovation. This includes companies that mine cryptocurrencies, develop blockchain technology, or create software solutions for the industry. Additionally, firms that provide services such as crypto exchanges or digital wallets are also viable investment options. Investing in these companies can offer indirect exposure to the growth of the crypto market, potentially benefiting from the industry's overall expansion. Another option is to invest in cryptocurrency exchange-traded funds, or ETFs. These funds are designed to track the performance of specific cryptocurrencies or a basket of them. Crypto ETFs track the price of one or more cryptocurrencies, providing a diversified and regulated way to invest in the asset class. This regulated approach can offer peace of mind to investors who are wary of the volatility and security issues associated with direct crypto investments. These alternative investment avenues allow investors to participate in the potential growth of the crypto market without directly owning cryptocurrencies, thus offering a balanced approach to crypto investment.
Section 9. The future of cryptocurrency, trends and predictions. The cryptocurrency market is constantly evolving. Predicting the future is difficult, but several trends are worth watching. One significant trend is the increasing institutional adoption of cryptocurrency. Major financial institutions are investing in cryptocurrency and developing related services. This institutional interest is legitimizing the asset class and driving further growth. Another trend is the growing emphasis on regulation. Governments worldwide are working to establish regulatory frameworks for cryptocurrency. Clearer regulations could attract more investors and foster greater stability in the market. The future of cryptocurrency is uncertain but exciting. It will continue to be shaped by technological advancements, regulatory developments, and the evolving needs of investors.
Section 10, a balanced perspective, weighing the potential and the peril. Cryptocurrency is a complex and rapidly evolving phenomenon. It holds both immense potential and significant risks. It has the potential to revolutionize finance and empower individuals. However, it is also a highly speculative asset class with inherent volatility. Investors must approach cryptocurrency with a balanced perspective, weighing the potential rewards against the inherent risks. Ultimately, the decision of whether to invest in cryptocurrency is a personal one. It depends on your individual financial goals, risk tolerance, and understanding of this emerging asset class. As with any investment, thorough research, careful consideration, and prudent decision-making are essential.